Hey, what's up guys? It's Vlad here. In this video I'm gonna give you an update on the housing market and we're gonna take a look at the prices and the supply demand levels in the US, and after that we're gonna take a look at the same for New Jersey. We'll see where we stand with the current mortgage rate situation. We know that recently we had a pause from the Federal Reserve. They didn't hike the interest rates this time. So at the end, I'm gonna try to give you my personal opinion on the housing market and where I think it will go from now. So let's jump in. The average house price in the US currently stands at $398,000, which is 3% increase year over year. So if you can see, the orange line in the chart is 2023. So how we compare to 2022 is it's going in the same direction, but we don't see the decline yet that we saw in 2022. So there was that seasonality increase in prices in 2022, and then we saw a drop towards the end of the year. So far we haven't seen any drop this year, so we will yet to see if it's gonna happen the same thing as in 2022, which I think this year gonna be a little bit different than 2022, and I'll tell you why in the next couple of slides. So this is the new listings. Year over year we have 23% less listings, so this is one of the reasons why I don't think the price gonna go dramatically down compared to what happened in 2022. So the supply is getting lower this year compared to last year. The demand is lower also, but not to the point as what the supply have gone down so far. So this is the active listings of homes for sale. The orange again is representing 2023. So if you compare that to 2022, you can see that we really had shortage of supply in 2022 at the beginning of the year, but as the year progressed, we saw more houses coming on the market, and that supply increased almost doubled by the end of the year. So we started with less than 600 houses for sale at the beginning of the year, and you can see towards the end of the year we had close to 1 million houses. And to compare that to pre-COVID levels, usually we had over 1.3 1.4 houses for sale at any given point in the past. So we can see here the months of supply available on the market. The 4-week rolling average is at really low level at 2.6 months. Usually healthy monthly supply is around 4 to 6 months. So we are like half of what healthy market would look like. So this slide is giving us the median sale price in New Jersey. We're gonna talk about New Jersey in the next couple of slides. That's 5% increase year over year we see in New Jersey. So we can see this graph is showing the gradual increase in price in the houses in New Jersey, in the average price. So we didn't see as sharp decline as we saw nationwide in late last year. So last year we peaked at $470,000 average price, and then we dipped down to 420, but the average decline was much bigger percentage wise compared to New Jersey decline. And now we see that we are at higher point compared to the peak of last year. So that tells us that New Jersey is not behaving as the New Jersey housing market is not behaving same as the national housing market. This graph is showing the number of homes for sale. Currently we have 27,000 homes for sale, which is 26% decline year over year. So this is very important to look at, and this goes back 5 years. So we can see pre-COVID the levels of supply houses for sale was above 60,000, 70,000 during off-peak, and during peak season that supply goes down since more houses are bought than listed. So we see the seasonality here. Every year that number goes up and down, but if you notice in this graph we just drop down lower and lower every year. So that's why New Jersey is different than what you're gonna see nationwide in the supply chart. New Jersey drops for the last 5 years every year. So it goes up a little bit off season, then goes down. And currently we stand at 27,000. So that compared to 60 to 70,000, that's like less than half what the healthy market had before COVID. So that adds a lot of pressure to the prices of the selling price of the houses in New Jersey, because the supply is just not there. So this is the number of homes sold, 7,580 houses sold, which is 25.5% less year over year, and this is for the month of May. So same here, we can see that during the season, which is mid-year, when the most houses are sold during the summer, we used to have before COVID like 14,000 houses sold a month, and now we are in season. Actually we are in June and we don't see that number. We are not even close, and the reason for that is because there is no houses out there to be sold. The supply is so low. The demand is much lower now since the interest rates are much higher, but the supply is much lower than percentage wise than the demand. This is the number of newly listed homes. 9,761 houses were listed just last month, which is 31.5% decline year over year. Again, same story here. We see on season, during the season, more houses listed, off season less houses, but overall the graph just goes down every year for the last 5 years. So during peak season, pre-COVID, we would have newly listed homes probably between 15 and 20,000, and now we are below 10,000. So this is a big problem for people that are looking for a house now. It's just very difficult to find anything out there. And lastly, we're gonna look at the months of supply. So as I said before, healthy supply is 4 to 6 months, more like, let's say, 5 to 6 months. And currently we stand at 2 months of supply, and that's disturbed after COVID. We can see that number didn't move up or down. It's just hanging around 2 months of supply. So that brings us to the sold price. We can see that 54.4% of houses were sold above listing price in the last month, and this is not as bad as what it was last year during this time. Last year in peak season during the summer months, we saw that number, that percentage, north of 60% of houses sold above listing price. Some houses were sold like 20-30% above listing price. There were many bidding wars with 30, 40, 50 offers per house. We don't really see that now. It's not as bad, but still the demand is not there. That's the main reason why we don't see that. The supply is even worse than last year, but the demand just went down a little bit. Last year the demand was stronger, so that's why we see less bidding wars, and with that the list price above asking is not as high, the sell price. So the sell to list price is 102%. We see that for a brief period we had the list price drop below 100%, which means that people were able to negotiate on prices. So that tells you that not too many offers were received for each house listed out there. But that changed a lot again at the beginning of this year. At today's date last year, we had 30-year mortgage rate of conventional rate 5.78%, and today is 6.7%. So we're talking about 1 percentage increase year over year. So that is the reason why we don't see that many people looking for houses as of now, and why the demand is lower and you don't see all the bidding wars happening. So this graph, again, I'm showing this graph so we can see what is Fed doing with the money supply, which is, for me, is more important to know how much money is being pulled out of the economy, what the Fed is doing with the printing press, if they're increasing or decreasing the money supply. This is more important than the federal discount rate that they always talk about, because the discount rate is just the rate that they require banks to lend between each other, or they call the overnight rate. Excuse me. So the supply of money is more important, and we see that number is going down. So since the beginning of this year, the Fed cut almost $1 trillion in money supply. That means that banks are not able to get money to lend to to other banks, and ultimately to people that. So when the Fed decides to increase the money supply again, we're gonna see banks lowering their rates for mortgages, and that's gonna influence the demand for mortgages. And at the same time, I believe the supply of houses will also go up, because there are a lot of people that are willing to put their house for sale, but they're waiting for better rates, since they have locked at very low rate during COVID times, and they don't want to lose that low rate. They don't want to trade like rates in the mid twos or low threes for the current 6.5 or 7% rate. So once we see the interest rates drop below 5%, a lot of houses, I believe, gonna be put for sale, and we're gonna see also increase in the demand and the supply side. The demand probably will increase 2 to 3 times more than the supply. So I believe, especially for New Jersey, I don't think there's gonna be any drop in prices, but that's just my opinion. So if you have any comments, if you agree or disagree, you can add them down below in the comment section. Thanks for watching, and please subscribe and hit the like button if you did. Thanks.